So term insurance is a temporary insurance that is for a specified period of time. So if you buy term insurance, it could be 1 year, 5 year, 10 year, 20 year, 30 year. It's not beyond 30 years. So you're not going to be able to just buy term insurance until you're 90. But the way term insurance works is this the most affordable option between the three types of insurance. And with term insurance, you are able to have insurance during the temporary liabilities. So what's a temporary liability? A temporary liability can be I have children and they're young, I have a mortgage and I want to make sure I cover it for the 30 years, I have debt, tax debt, I share debt with my spouse, and so God forbid if something happens to me, I want to make sure that there's something in place to pay these debts, right? So they're temporary coverage. So temporary insurance does two things. It's going to cover you for that specified amount of time that you want to cover a temporary liability, and it's also, you have the option of it being convertible. What does that mean? That means that I can convert the policy from being a temporary policy to now being a permanent policy. So if I have a term policy, I lock in my insurability, meaning if I was to become sick or I will become uninsurable for whatever reason, because I own this term insurance already, I do not have to qualify for me to be able to get another policy. I can actually convert the term policy to a whole life policy or to a universal life policy, depending on the company I purchased this term policy from. What I mean by that is if I buy a term policy from a company who does not offer other permanent products, there's going to be nothing for me to be able to convert to. But if I purchase a term policy, a convertible term policy from a company that offers whole life or universal life, when I am ready to convert, and usually there is a period of time that you can convert. A lot of companies is 10 years, some companies it's 5 years. So this is a question that you want to ask your agent. They always have an option to extend the term conversion. So let's say the company does do the term conversion for 10 years, then they can say, well, you can extend it your full term period. So if I do a 30-year term, then they can say, well, your extension is for the 30 years. Of course, that's a rider and it will cost you more money, but it will lock in your insurability and you not have to worry about your health changing if you decide you want to make a change with your insurance. So term insurance is temporary coverage for a specified period of time. You have the option to convert, and there are a lot of riders that you can get with this policy depending on the company that you go with. So there's riders called disability waiver, which will cover you if you have a long-term disability. It will pay the policy for you. There are riders where the term can be increasing over time, meaning that if I purchase a $500,000 term and over the course of time it may go up to $600,000, $700,000, whatever the company is offering. There might be a option for you to have accidental death, which means if you pass away from an accident, then you would get a higher death benefit. So make sure that when you're purchasing a term policy that you're finding out what riders they offer. That may be something of a benefit of what you're looking for. What term period do I need this policy? Do I need it for 5 years, 10 years, 20, 30? And then also you want to make sure that your term policy is with a company that you can convert to a permanent policy if you choose to in the future.